We're pleased to be joined by the always interesting Brian Detrick, senior market strategist at LPL Financial. All right, so far, listen, we got a couple of trading days left, Ryan, in the month. But right now, we're on track for our best January for stocks since all the way back to 1989 when I was a freshman in college. But what does that mean for the rest of the year, historically?
Well, first off, Brian, thanks for having me back. That's right. 2018 apparently is picked right off for 2017 stop. Think about this just for a second. 18 trading days this year. 14 new highs have been made for the S&P 500. That's the most for any month since June 1955. Now, obviously, like you said, we've got about almost a 7% gain so far in January. There's something called the January barometer, which is so goes January, goes the year. Now, you could argue maybe there's some randomness to it, but still it's important to talk about. Brian, the average final 11 months of the year are up about 8% on average for the S&P 500. When January's higher, those final 11 months go up to about 12% on average. When January's lower, up about 1% on average. Right there kind of, gets your attention. But here's what really matters for this year. When the S&P 500 is up 5% or more in January, like it very well could be this year, those remaining 11 months go up to about 16% on average. So really strong, higher 11 out of 12 times. Only time those final 11 months been negative, 1987. Most of the time, a good start to a year does lead to continued gains, and we'll see if it can happen this year, but we think it can.
Okay, fair enough. History is on our side. However, I would say this, as I have argued on the show Power Lunch, that interest rates may be the story that we're not talking about enough. Back in 1989, we were 2 years into Alan Greenspan's 21 or whatever it was year term. We have not only a new Federal Reserve chairman coming in, but we've got a number of new voting members, some of whom are literally new voters. They've never done it before. They are new to the Federal Reserve. So we have a historical wild card, Ryan, do we not, which we've never had before?
No, you're right, Brian. We absolutely do have the wild card of a new Fed leadership. And you go back 100 years, there have been 16 Feds now. 6 months after new leadership in the Fed, the Dow's actually down on average. We've seen a lot of volatility near term after new Fed chairs come into power. So with the 15 months in a row of gains on a total return basis, heading into the normally bearish month of February with the new Fed chairman, absolutely there could be time for a pullback, and maybe it could be that new leadership and the uncertainty that comes with it that can lead to a little bit of volatility here in the coming weeks and months.
Repeat what you just said. In the 16 Federal Reserves, effectively, that we've had over 100 years, 6 months into a new term, the Dow tends to be down?
That's correct. The Dow is down on average 6 months after a new Fed chair takes office.
Just because the market is
1914 was the first one.
They don't know. They're not sure. Maybe the new Fed chair screws it up.
Who knows? I mean, there's a lot of data in there, but the bottom line is that uncertainty, coupled with other things. Brian, this is a midterm election year. Historically, out of the 4 years of a presidential cycle, the midterm election sees a 17% correction on average. Now, we're not thinking we're going to quite see that much. Nonetheless, this is the time volatility tends to happen in the 4-year cycle. And with that big gain we had last year, maybe some type of correction with an upward bias by the end of the year definitely could play in our view here.
Ryan Detrick, LPL Financial. History is on our side, but the Federal Reserve is a big wild card. Ryan, it was always a pleasure to get your interesting stats and insight. We appreciate it. We'll see you again soon. Thank you. Folks, as always, thank you for tuning in to Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.